Hi, my name is Greg Owen. I'm with the Easy Home Store, and in today's video I'm going to explain the 10 alternatives and options that you have when you're facing foreclosure. It's going to take about 10 minutes. We'll go through each one and explain the pros and cons, and hopefully you'll be able to find the ideal solution for your particular situation. Okay, so the first option you have is the one that everybody seems to do, which is nothing. So let's say the bank has served you with the lis pendens paperwork, it's gone to the initial stages through the courts in foreclosure, and you, I guess, figure that the bank's going to come in and offer you some kind of loan modification or whatever it is. It's kind of like a delusional phase, I figure. Once you realize that's not going to happen, because in 99 cases out of every 100 it does not happen, then you'll figure out that I guess you're not paying a mortgage payment, and you're not, if you move out you'd have to pay a rent payment. So therefore the ideal thing for you is to string it out and stay as long as you can and basically steal from the bank. I kind of consider that stealing, but from your perspective I understand, yes, you're not paying rent or mortgage, and so make it last as long as is possible. So what happens after that is that the bank will foreclose on you. They'll obtain a certificate of title, a writ of possession. The sheriff will come and ask you to leave nicely. You'll come with a couple of other people. One's a locksmith, and there may be a couple of other guys that take out all of your possessions and load them up on the side of the street, unless you have done so already. In that eventuality, you had better have a van there waiting, otherwise as fast as the guys come out with your stuff, all your neighbours will be taking it into their houses instead. It's going to remain on your credit for years to come. The bank have a couple of options. They can file a deficiency judgment. They have 5 years in which to get that currently, and they have 20 years in which to collect on that deficiency judgment. So put yourself in the bank's eyes at the moment. If a load of people owed you lots of money, would you go after them now where times are a little bit harder than they were, or would you wait 10 or 15 years so people are back on their feet and have forgotten about this? Well, I know what I'd do. Any bank that has a debt, it's a valuable asset, and they'll sell it. They'll put it to a debt collecting company, or I can buy credit card debt at 10 cents on the dollar at the moment, and then pursue the perpetrator for the full amount. So it's clearly not the best solution for many people, and one that you should avoid. Also, you should bear in mind the tax implications of doing nothing, because the bank can issue a 1099-A, which is abandonment of debt, to the IRS. They consider that money to be a gift, so they take up all of your missed payments, all of the court costs, all of the attorney's fees, lump it all together with a load of servicing costs, insurance fees, then the selling costs of having to resell the property subsequently, and then the amount of money that's written off compared with the original loan amount is notified to the IRS as a gift. Gift tax at the moment is about 30%, so you can expect the IRS to come after you looking for a big chunk of money potentially as well. So clearly that's not the best option. Second option is to pay off or refinance the loan. If you are underwater and you haven't missed any payments, there's a government program called HARP at the moment, it's 2.0. You can basically go and refinance the property to a new lower interest rate, make it much more affordable, and remain in your home and avoid foreclosure. There's a couple of rules that you need to understand. Principle one is you cannot have missed any payments. If you've missed payments, you do not qualify for that. The payoff part of it is simply, if you only owe a relatively small amount of money, you can pay the loan off in full. Third one is a reinstatement, which is a lot of us fall on hard times from time to time, and if you miss a few payments, you can simply pay them back, bring it back current again, and everything goes back to where it was before. You should not necessarily assume that the bank's going to do you a deal and allow you to break it down into more convenient chunks. 3 missed payments, for example. They're not going to take one and allow the loan to be reinstated. They want it all up front usually. Be careful about deals that the banks do, because on occasions they will take your money and continue to foreclose on you. It's called dual tracking. You might want to ask an attorney for some advice with regards to that. I am not an attorney, nor am I an accountant, but on a day-to-day basis I do follow the contractual law of real estate. Next one is called a loan modification. Now there's 2 types of loan modification here, and I'm going to teach them to you real quick. One's good, one is bad. The good one is called a recast. That is a new 30 to 40 year fixed rate loan for an existing loan. So you're basically going back to the same bank and saying, I want to refinance this and start afresh, a new loan. You would be required to have some equity in the property. If you owe more than the home is worth, it's very unlikely you'll get a recast. Overall, compared with loan modifications in general, about 1 or 2% of people end up with a full long-term recast. The vast majority of people are offered what's called a trial loan modification, and that is bad. That is a new 3 to 6 month program whereby the bank it's designed specifically to extract information from you so they can use it later on to collect. If you go and Google this, you'll find there's countless people that started off with a trial loan modification that did not convert into a full long-term recast. Furthermore, there are instances where people, I even had one case where a guy was serving in the military. He came back to find out that despite the fact that he was current on his trial loan modification, the bank had foreclosed on him. Believe it, the bank are not your friend on this. You need to act cautiously and carefully. The problem with trial loan modifications is the information that you submit. Of course, you're going to try and make yourself look good, and you're going to tell them about your assets, how much you're earning, and you're going to try and make yourself look good. You could be digging yourself into a hole. Be very careful about what you divulge to the bank, especially if you had a stated income loan where you told the bank how much you earned and they didn't ask you to prove it. If it subsequently appears that you were giving false information, you can end up in a lot of hot water. You could go to jail. That's called mortgage fraud. Stay away from that. Be very careful. Next one is called forbearance. This is number 5. Forbearance is what we all had before loan modifications came about, and it is basically a payment holiday. If you had a loan, let's say you've had it for 17 years, you lost your job, other than that you had a perfect record, you got lots of equity in your property, and you're out of work for 4 or 5 months, and then you go back to the bank and say, look, I've got another job, it actually pays more than it did before, I just want to go back to paying the payment I was on before. Again, there needs to be some equity, you need to have a good payment history. What a forbearance agreement basically is a payment holiday. What they can do is tag the missed payments onto the end of your mortgage and go about the payments as normal. So you're extending the mortgage term by the number of months that you've missed those payments. Next one is called a partial claim. Again, if you've got equity in your property, you could take out a second loan with another lender to pay off the arrears that you've missed out on the first one. Bring the first one current and you're back on track. And that's simply all it is. It's a second mortgage to pay off the arrears. Okay, we're up to number 7 now. We're talking about a deed in lieu. If you no longer wish to keep the property, you can hand it back to the bank. You should do so on your terms, not the terms that the bank lay down necessarily. You want immunity from the bank pursuing you for a deficiency judgment. You want to ensure that the bank does never have the capability to come back looking for what is written off after they take ownership of the property and subsequently resell it. So it has to be done on your terms. I would suggest talk to an attorney about a deed in lieu. Next one is bankruptcy. A number of people out there are selectively delinquent. They've chosen simply to walk away from a bad investment. If you're one of those people, go away and do your bankruptcy, have fun, good luck. The laws on bankruptcy, I'm told, have changed recently, and in all likelihood it's probably going to get set aside. You'll end up doing a short sale anyway, but whichever, protect yourself. Bankruptcy attorneys are expensive. You cannot get a decent bankruptcy attorney for $99. I know we've all seen those signs on the side of the road when we're waiting at the traffic light. That's not a real bankruptcy attorney, that's just a pretend thing. Okay, next one is called a sale. Now, if you have some equity in the property and you've missed payments, you can sell the property, pay off your mortgage, you go away squeaky clean, talk to your credit repair counsellor and have them fix the missed payments, and you'll be back on track. If you are underwater, you can do what's called a short sale. The short sale is where the property is sold at today's market value and the bank will allow you to pay back less than the full amount. It has to be done through a specialist real estate agent, someone that is skilled and experienced in doing these. The average realtor is not. You should ask your realtor, how many short sales have you closed? and show me. Give me evidence of what you've done. Give me testimonials from people you've helped in the past. This is not a regular real estate transaction. It's highly skilled. You need a lot of expertise and you need a team of people to make it happen. It's not the kind of thing that the average realtor does over the weekend. Be careful about this. The good news is it won't cost you any money. The bank will pay all of the costs associated with the short sale, and they will give you an indemnity that they will never pursue you looking for the difference, as long as your real estate agent negotiates those terms. On occasions, they will come back and ask you to make a contribution towards the missed payments. Take it into consideration. We had one client that was asked to pay $20,000. They had two credit cards with a zero balance and a $20,000 limit, and they were most put out by the fact that they were asked to max out these credit cards and send the payments. The bank wrote off close to $1 million on their mortgage, and I said, look, this is 20,000 compared to $1 million. It doesn't need a lot of calculating, it doesn't need a lot of working out. Just go and do it and write off the rest. Move on, dust yourself off. You can fix your credit after a short sale within 2 years. A foreclosure stays on about 8 years. Again, do the math. It doesn't take an awful lot of working out. The final one is to rent the property. If, for example, you have to move jobs and you're underwater but you're otherwise current on your loan, you can rent the property out. The rental money will pay the mortgage payments. If it does, it's an ideal option that you should consider. However, again, be very careful. There's plenty of people out there who will give you 1 month's rent and a security deposit and then not pay you anything else after that and trash the place, and that could end up worse off than you already are. You need to do very strict, scrupulous background checks on people before you rent the property out, but that is another potential option open for you, and that's the number 10 one. We've gone through them all. There are no others. If you want to speak to me, you can contact me. Our contact details are at the Easy Home Store on the website up here, and I'll speak to you again soon. Have a great day. Bye.